that stuff. You're good. It's nice. Good stuff. All right. Same deal. What do we got? We got price going up. Depending on what day this is, right? He's saying day 2, 3. Perfect. Okay, what do we expect day 2, 3? We expect an aggressive pullback into some type of W formation. Take out the old apex nadir thingy, right? These are the two areas. Okay, when you get a complete formed out W, I like this. But this is not incorrect. This is okay too. Because this is the last high swing. But when they adjust down, right? Sellers won the book here, but they rejected back into mid-range. That becomes the new adjusted apex. They went down again, took another stab at it, couldn't get it, and they got above the swing. Now, this is tough. There's not a clean entry here, but the entry would be this bar as a pullback, and he used this one over here, and he got in this bar. Either way, they're both acceptable. This just gives you a little bit tighter stop, but looking at the way the bars broke out of there and ran all green, he had very little draw in either entry. Okay? Then what do you get? You got to take a measured move from here to here. He gets a nice swing pullback, push 2, and he's coming off of this pin, looking for a refined entry. Buy limit order, back up limit order, and he gets that. Now, where's the TP? The TP, he took it here, should be an equivalent move to each one of these legs. Right? So he could have measured here to here. Right? He could have took his fib tool, extension A, B, put it on C, and had a projection up here somewhere. And it looks like a pretty damn close to a measured move. Looks very nice. Good stuff, man. Can't make it up. It's perfect. All right. This is kind of cool. It's like a bowl. You don't see this too often, but I like it. Okay. Where's the apex and everything? This is tough. This is not a bad place to draw it. I like it here, a little more compressed, because you got a lot of high side rejection right here. This would almost be like the way it squeezes in here, like an Asian range, right? It's kind of square like that, because it's kind of a flat print on top and bottom. So that kind of would become your Asian range right here, and you're looking for a break. So, but there's nothing wrong with that. He's looking at the last pullback. But believe it or not, this is a book level, and this is a book level. Because price is compressed in here, and they have to put orange here and orange here. So you need a break of this orange. There's absolutely orange here, and there's nothing wrong with this using this. The only difference would have been you might have got a little bit better entry if you used a breakout here or tried to buy the bottom here. And I understand there's nowhere to measure to get that clean. I mean, in a perfect world, you get that impulse, push back micro W long, right, coming off of an anchor W. That's what this is. This is not a bad spot either. That's the first consolidation after the trend reversal. I told you last week, safety trade. The safest place to trade any instrument on the planet, I don't care if it's gold, lean hogs, oil, nickel, palladium, whatever. I don't care what it is. Currencies, futures, I don't care what it is. The safest place on the planet to get in a trade is the first pullback after a trend reversal. Okay? And that amounts to what looks like this shit right here. Right? And it would be an M, trend reversal, first pullback. That's the safest place, and this is the safest place. Up or down. Why? You have your anchor. It has to take out the apex nadir to clear the reversal, right? You have impulse, hard third leg, pulling into it. Then you have consolidation. The deal is balancing their book. Then you have a hard reversal, right, which confirms the change. They take out all this stuff. They trap higher level long holders, shift the book, and they will not go back into this block zone. I'm saying this for 23 years. They will not go back into that block zone. Right? And that's your ABC move. And you get the measured move off of this leg based on how hard they shift out of there. Right? So you're going to enter on C and talk, I'm sorry, enter on, what is it? A, B, C, D. Sorry, D. Blow it. Okay. You're going to enter on C and exit on D. And D is going to be a variation of A and B plotted forward. And you can maybe even pull it up at 80 or 90% to make sure you get it, because sometimes they shorten level 2 or push 2 and pull back harder. it. It's the safest place on the planet to get in. Right, and this chart from a while ago, I love the way this guy marks it. It's very, I don't know, too clean. It's almost like a poster or something. But believe me, this is how I mark my charts. This right here, this is how I do it. You guys know how sloppy I am. You can't even read half my crap that I post, right? Okay, so this is I don't know. This guy's like an architect or like an engineer or something, but it's perfect. Just take a screenshot of this, take a look at it. He's talking about where absorption happens, where the rejection zones are. He's got his 1, 2, 3 pushes, his reversals. It's perfect. It's just a good homework chart. Let me clear my ink off of it, and you guys can just take a picture of it. I don't know, maybe frame it, put it somewhere, something. Use it as an example. But to me, I don't have the patience to type all that in. This is me down and dirty right here. Start drawing shit, pencil and pen, and just get to the point. All right. So I want to pick up where we left off from last week for the rest of the lesson tonight. You should be able to walk up to any chart, any instrument on the planet, anywhere in the world, and know where the next move is. That's my goal for everybody in this room for the rest of my life, whatever that may be. 5 minutes, 5 years, 50 years, who the hell knows. We were talking about cycles last week and counts, right? Stuff to lean on, book mapping zones, that kind of stuff. That's where we were at. I was showing you some charts when we were going through that stuff. So I want to talk about the levels and how to make projections, right? Calculating the zones on the higher time frame, where stuff's going to terminate. This is good for people that maybe trade a little more longer term or want to target like a full run, like 75, 100 ticks. Swing traders, or if you're struggling with that area and not happy with taking 30, you want to try to get your level 2s into like 50 ticks or so, this is the stuff for you. So using the blue tracer, right? ADR is the measurement where the blue tracers are formed. ADR is the blue tracers, the low swing to the high swing. So if you're using that, and we know that the tool that we have in MT4 lags, right? The ADR marker lags because it has to adjust as price is moving, and the bottom, like if it's long, you guys know this about the tool. I've always hated this about it. There's nothing you can do. The ADR will be plotted like this, and then when price moves down, these two brackets will drop until this hits, and as price moves up, then it starts to expand and plot properly. So it's really a later day tool, right? And that's a flaw with it. But the idea would be to take yesterday's blue tracers, which is an ADR measurement, and plot them into the next day. We do that. So the better way to calculate this stuff is to take the numbers, ADR high, low, or blue tracer to blue tracer, and get some type of hard number. For argument's sake, I'll just make it 100 to make it easy. I don't want to lose you guys with this stuff tonight, but I've talked about it a long time ago, and someone asked me about it. And it made sense that I would cover again because I haven't covered so long, and we have a lot of new students and stuff now. So why are these levels significant? Because we know using Bookmap that the orders are stacked at these levels, right? If your ADR markers or your blue tracers, when you get to these levels, there's multiple levels of red, orange, heavy order flow in the book. You're at a confluence of known reversal days, days 3, day 1, cycle counts. That's more stuff to lean on. You can anticipate solid trade zones and book flip areas just from knowing how to project these parts of the chart. Right? Look left to become right, or to be right. So I'm going to walk you through this model, and I'll draw it out for you too. But we know that the first Asian range of the week is an area where an anchor has to form for some type of directional move. Right, so the first high and low of the week, Asian range of the entire week. You can add or subtract plus or minus 1 ADR for a daily reversal level. And you can plan out where price should go. Swing trader, you can hold it for a couple of days based on some things. Right? If you're a swing trader, you want to take day 1 and day 2. because you're going to get a massive pullback on day 2 at the end of day 2. Sometime in day 2, after you run ADR, you're going to get a pullback, 50%. It could occur on day 3. You want to match those previous levels, and it will be relatively easy to find a place to deal from. What do I mean? Look to the left, swing points, swing high, swing low from yesterday, blue tracers, areas where you want to deal. Right? So you're going to get the high of the week. You're going to have the initial Asian range, and then you're going to have the high of the week, and you're going to get -1 ADR or -2 ADR where you want to deal from. And if you have the low of the week, it's going to be +1 ADR, +2 ADR, etc. Okay, I know it's confusing. Just hang with me and then I'll draw it out for you. Okay, here's a walkthrough. High of the week. Day 1 is going to be an up day. Okay, that could be Friday or Sunday or Monday. You're going to get trapping and accumulation. So you're going to have, right, just picture the pattern. You're going to have your accumulation. If you're looking for a sell-side book, if the trend is down, you're going to get a high of the week somewhere in here, right? So usually if it takes 1 day to formulate that, it's going to be 1 ADR, one full run into form a high, which will be actually a stop hunt and trend accumulation. Now you might get a double top out of this, right? This is your Asian range for the entire week. You're going to get a stop hunt high. Accumulation could be Sunday, could be Monday. Day 2 is going to be a down day. You're going to get level 1 impulse with a trend move, and the trap's going to be set. Understand that when they trap the higher level long holders, they're going to move price past the Asian numbers because this is the accumulation box for the first part of the week, and whatever's left over from Friday, Thursday and Friday into the book on Monday. Okay, day 3 is a down day. It's level 2, normal, calm trend day. It runs smooth, safety trade comes out of there, right? Because there may or may not be a stop hunt, but most of the time it's mild because they don't want to recross the zone and allow people out. So you get the straightaway out of there, or you get a mild stop hunt. Some people get relief from that. Most people do not. They're stuck up in here. The next day, right, we're just walking through a normal week. Day 4 is going to be an up day. Well, what do you mean, Steve? We're talking about a downtrend. Because after level 1 and level 2 are produced and they trap everybody, they're going to give those people hope, false hope. Because we know that the end of level 2 offers a 50% pullback almost all the time, sometimes as deep as 786 or 618. And I don't go by that. I go by what's going on the chart, where price is, where the last rejection zones are. Like to me, I would look for it to trade back to just underneath Asia of the week, Asian range of the week. All right, you guys with me? Am I losing you? Some people are saying, what the hell? Okay. Day 4 is an up day, so then what has to happen? After the level 2 levels are produced and price pulls back 50%, then day 5 in this example is going to be a down day. The down day on level 3 is so aggressive and volatile that it exceeds the standard ADR and appears to almost go vertical towards the end of the run or the end of the session. Right? Does that make sense? You're going to get this massive push, and it's going to start off calm, and then once it gets below here, it's going to be pain. It's going to appear vertical. Right? What will happen is you'll have these big, long, straight drop bars with very little wick, and they'll almost very little overlap to them. And that's going to make the market appear vertical. Can you guys see that? I'm drawing. Yes. Okay. Does that make sense? And we know the process repeats itself over and over. It's just the way they do business. But the thing is, if you understand it, you could profit from it. So how do we get projected reversal zones into the future without doing too much work. I know you guys don't like to work. Nobody does. So what you would do is extend the previous blue tracers into the future and watch how they interact. You're either going to get a rejection or a continuation, and I have a picture that did both, and there was two solid trades there. Since we know the blue tracers have a very high amount of stopping volume in the book, it's a good place to look for trades. You're either going to get a breakout continuation or a hard rejection reversal. At the time that the blue tracers form, think about what the blue tracer is. It's a turn bar right in the middle of a powerful move up or down. I mean, they got everybody flooding in, pushing price up, and all of a sudden it stops dead, and it's not another pip, man. Not even a pipette. They're not giving you another inch on that chart. It's over. Think about the power and the volume that it takes to do that. Right? The stopping volume is so strong and large, it's capable of stopping the entire market of opposite-sided traders. Obviously, if it's a down move, they come in and sweep it and take it back up. They stall it right there. If it's an up move, they slap it right back down. It's very powerful to do that in the market, right? I mean, it's millions upon millions, if not trillions of dollars now, right? It's ridiculous how much money's flowing around. And they stick that out there. It doesn't all get absorbed, but you know what it looks like. It's stacked in the book, right? Multiple levels, and they want some of it to be executed. So maybe it'll bleed into here. You guys seen the bubbles in the examples I've given you. It'll stop somewhere in here. Then there's usually some black space, and then they stack another couple red lines up there for insurance. So when you see that and you start seeing these rejections, it ain't getting through there. Do you need the book to see that? No, you need that. This is all you need. This is, look, stopping volume was right here in the book. They capped it, and they weren't having another tick, right? They tried again to run it up, and they stopped right at the top of the bodies, which is perfect. This one failed below, did not take out the swing. That's a failed buyer's auction. It's probably over, right? And that's our typical M formation. Now you take this M formation, it forms yesterday's blue tracer posted on today's chart. So what do we expect? We expect price to retest in this region and give us some type of action. This happened to be a news day, so they came out hard. They dropped it down aggressively, and if you just sold the limit order right there, you were golden. They spiked it down, you're out, and then they went back the other way and formed a W. And what did they do? They gave you an opportunity to get long. So what happens is you have to get the break and the pullback. You do not take it on that. That is your refined entry. Right? You only got one shot here. Maybe if you zoomed in on a lower time frame, you might get something. But you don't have that spacing that I like to see. But there's a lot of confluence here. Let's talk about confluence. We've been talking about that. Look, you got a 1, 2, 3, right into the high swing on the blue tracer. Right? You got stop hunt low, did not take out the swing. This takes out this. That's a break higher, but fails and comes back to AR mid. That's a safety trade. Safety trade into the tracer as a target. 3, 2, 1, 0. You got to get out right there, and rightfully so. But the thing is, a lot of you doing this, and it's hurting you, is that you have to reach a level where you become fluid. And I don't know how to teach you that. It's just time and experience. But what I mean by being fluid is long here, short here, long here, and end the day. Trade both ways because they're doing it to you. They're trading both ways on everything. You're accumulating longs and shorts in every one of these candles. You've seen the book. It's good to have a bias, but it's better to be fluid in your thinking. Right? Okay, if you decided, you don't have to go short right here, but you absolutely need to get long here on this W formation. They broke the book higher, right? They took out Asia. They failed to get below Asia on this one. That's a long, all day and twice on Sunday, right? You buy the first pullback after they flip trend reversal. Trend was sideways, they showed down, they changed the book, the first pullback long into the tracer. That's got to be the target. Now, where can I get the tracer going the other way? Maybe you grab it here. And this is new, so it's not really a good example, but it's the best chart I had where it hit it twice and broke it. Okay, now you're looking for somewhere else, okay? You got your apex nadir thing down in here, right? Maybe you could have dropped down to a 5-minute and got something here to get long. But here's the trend reversal, right? Here's your anchor low. They were sell side. Now they're buy side. Why? They flipped above yesterday's high. They trapped all this in one move. All this bullshit for 2 days going on. News, everything, scaring the crap out of you. You think it's going down? They came and swept it right back, and they're above. Now you're looking for a W here, right? You get the first break. We find the entry on the tracer. Looking for a buy limit order right on here. Stop's got to go right below the blue box. And that's a monster trade right there, right into the highs. Right? Then what? You start drawing. Okay, now, if price gets below this swing into this thickness of the book, it's probably over. But you could have took another 1, 2. There's your finger roll right there, air spacing, whatever the hell you want to call it. And then you had another trade and went higher. Price did go higher. This is gasoline, by the way, crude oil, CL. All right, so a couple questions coming up. Where's day one? Okay, day one is the reversal of the cycle, but for laying out the entire week, I want you to understand that. I guess I could have called it day 0 to make it more clear. Right, this is day 0 accumulation, or what I called it on this lesson was day 1. Day 1 is the accumulation in the Asian range of the week. Right, then you can even project your AR numbers out into space. Part of it. Now, what do you expect? You got accumulation on Sunday. If price is to be down for the week, you're going to get a stop hunt high drop. So you're going to get day 0, day 1 move higher, and then form out some type of M or A-frame formation to start going short. Then day 2, right, is going to be the safety, but they're going to cross aggressively and try to stay below here. Because they had, just like they did this crap, look, accumulated all this, now they're higher. So all this is trapped. So the same thing, they're not going to repeat into the Asian numbers. Just like they, look, this is what I'm drawing. They trapped all this crap, and then they got above it, they fished into it a little bit, and they were gone. So now they got everybody and their mother sell side. I'm pretty sure my mother was short on this. I told her, no, don't do it, Mom. Get out quick. They got everybody in their mother's short side, and they shifted the zone aggressively, and they just dipped into it a little bit. The thing about that dip, it helps them pick up some orders on the buy side of the book. But what happens is people go, oh, no, I'm getting it in, but I'm going to come back. They might be short down here, praying for a miracle. There's no miracles in this business. There's only good decisions. You get dragged backwards, cut this shit, get out, and then turn the other way, being fluid. But first of all, the trend is up, moving averages are pointing up. Right, a dip below and a pullback above the swing and gives you a micro W. That's all the makings of a long. And if you look over here, it's kind of the same thing. Look, they were high side, they pulled back. There's 3, 2, 1. They went, but they did not take this out. You got to get out. Then it's end of day also. All right, and here's one where the tracer held in one swipe. These are your zones. These are what your zones should look like. Right, here's a clean example of the entire thing. Asia, stop hunt high, drop, right? Accumulation, and then sweep it, and don't look at those numbers again for the rest of their life. For the rest of the week. This is what I'm talking about. They accumulated higher level long holders, and when they decided to trap them, there it is. And this is over a couple of days, but this is working out the weekly cycles to understand where you are. If you're not squishing this crap together on the chart to get an idea of what's going on, you're hurting yourself. Because you can come to the terminal and think you should be higher level long, right? Long here. And then what happens? As soon as they vector like that, you know you're starting to get yourself in a bad spot. Accumulate some more, right? Look, accumulate above the number, and then sorry about your luck, sweep the book below. That's the kind of stuff you're supposed to be looking for when you're doing your check downs and understanding levels and where you are in cycles. Right? Then you can take, remember I always tell you, take the whole structure. Does it fit under the current area? Yeah, the price is still downside. I mean, there's up moves in here and you can trade them, but overall, generally, price is down. Because these highs only barely fished into these levels. They never hit it again. They're staying below. So that's seller's book, man. High side trap, seller's book. What's the next anticipated move? Sell side. So if you know it's sell side, then you don't take longs. You can if you're fluid, but you take shorts at the highs of the day. You short highs of the day. Right? Look at that. Pin the tracer. Double tested. Broke the tracer, but gave you a chance to get into it. Right? This is the tracer. You missed that. You're using tracer right there. There's a double tap into the tracer. Same thing over here. This repeats. Right? Because they run it up, then that prints higher the next day. But that's right in the top of AR. And then they come out. So if you understand all this accumulation, right? First part of the week, and then they're trading off the numbers. This is the block zone for the week. Just like there's a block zone for the day, there's a block zone for the week. A number that they don't want to mess with anymore, that they got what they needed from, they're not going to mess with it. They shift the trading zone away from higher level longs. And if you lifted your stop on that, I'm sorry about your luck, man. You're going to be staring at that shit for a month, 2 to 3 weeks, right? Till you get out. It's 3 impulses, 3 pushes, 3 days, 3 weeks, 3 months. It moves like that. There's a guy that talked about all that squaring and stuff. Can't think of his name. He was like a geometry trader. It's pretty cool. But I mean, you'll drive yourself crazy trying to figure it all out. Somebody knows who it is. Maybe it's Gann or something like that. He did like 9 squares, and he talks about the same type of 3 cycle stuff that I was taught. Talks about like 30 days, 90 days, like I don't know if it's Gann or not. But anyway, it's irrelevant. I mean, you can look it up if you're obsessed with this stuff. But the idea is I'm trying to get you to not rely so much on counting, because a lot of you guys are struggling with that and not even doing it in some cases. Is look clean on the tracers. Understand what the tracers are doing. Just walk up, squish the chart. Look, 1, 2, 3. You can almost see it pushing, right? And basically, this is like a whole. If you look at this chart, right, this is just a big M shift into mid-level consolidation, and then another M, and then the next level. So on a monthly chart, this could be like stop hunt, high drop, L1, right? Safety trade. This is basically a huge monster safety trade. If you think about it, because it doesn't go above, it's not a stop hunt high like this drop. This is just a safety roll out of there. If you look at how it interacts with the averages, right? Look how it interacts with the moving average, exactly the way safety behaves. So this is a big, massive trap to the high side, right? Level 1. Then the next day you got level 2. So what's going to happen? This whole structure will drop, but then you're going to have where price ends up pulling back because level 2, after level 2 is completed, right? Let's just say this is L1 on a bigger chart. It looks like a 4, sorry. And this is level 2. Right? So at the end of this level, wherever this terminates, they might have a week of up moves. Because they just did a safety trade on the monthly chart. So what's going to happen after they complete the monthly? It might take a whole month to draw out level 2. Just understanding that this stuff is over and over and over again and how to do it, right? So you can take ADR, right? The number of ADR just for 100. And you can go, okay, coming out of accumulation plus 1 ADR. Then minus 1 ADR, minus 1 ADR, right? Which would be total minus 2 ADRs, minus 3 ADRs. Sorry, I keep drawing plus signs. Minus 3 ADRs. Then you're going to get a big pullback. So that next day will be plus 1 ADR on an intraday chart. Or a weekly chart. Intra-week chart, sorry. And then you start looking where, okay, I'm looking over here. What's 180R? 180R is right where that blue tracer was. Man, I'm going to get a break below and a retest. And that would be your trade. And that would, you can go for 100 pips on that, 7,500 pips all day. You could look at a 5-minute chart and see the same exact crap I'm showing you on a monthly chart. It's over and over and over again. It's just, you have to decide what works for you and how you want to analyze the market. And you find your spot. All right, homework, and then I'm going to get out of here. My throat's bugging me. Okay. Using the concept I just talked about, map out a trading cycle for yourself. Do it on a 1 hour, do it on a 15-minute, I don't care. But it should look something like this, right? Exactly what I just drew up for you. But here's the thing. People, there's some new people in here, so I'm repeating this, but everybody asks me, does your stuff work on futures? Does your stuff work on this? Does it work on that? It works on everything. It's how the behavior has to be in order to cheat people or take their, I don't know if it's cheating them, taking their money from them. It works on currency futures, which is the 6 contracts. I love those. And it's 6 money contracts, but they call them the 6s. And it's 6A, which is Australian, 6B, which is the British pound, 6E, which is euro. They're future contracts. They have the yen. They're quoted different. GBP and euro are normal. Well, normal. They're quoted normal. But yen is backwards. It's not dollar yen. It's yen dollar. So when the pairs that the quote GBP is first, or those are first against the dollar, those are normal. The ones where it's USD / whatever, those are inverted to the country and then the dollar. No big deal. Something you get used to. That's all. Like if everyone's going long dollar yen on Forex, I would be short dollar yen in the futures contracts. The opposite. Okay, and what else? CL, crude oil, E-mini S&P, NASDAQ, gold. These are my favorite instruments. Stocks, I don't really mess with stocks, just in a different portfolio for long-term shit. I don't trade stocks. There's a lot of slippage, there's a lot of liquidity issues with it. I just never really cared for it. I mean, I learned Forex from the very beginning, and I've just been obsessed with this stuff. Very liquid market. Yeah, I mean, you guys know that's the same reason you're here. Whatever obsessed me with it probably obsessed you with the same shit. It's almost like they got us with a good marketing campaign. Okay. That's about all I got tonight. Any questions? All right? The whole spiel, the whole thing is to understand market behavior and start being able to map it out. Remember, this started with a beautiful W that was not a real W. And the reason why is that people actually sent me that crap and said they were wrong and they don't understand what the hell happened. And that's from not doing a proper assessment of where you are in the cycle or where you are in the market and not leaning on anything other than the fact that it made a couple of bars that look like a W. I can find a million of those right now that fail. Right? Simple, down and dirty. Where's the water? Are you trading above the water, below the water on the 15-minute chart or the 1-hour chart? Whichever works for you. Price is below the water, looking for pullbacks to the high side, and trade down. Price is above the water, looking for pullbacks to the downside, trade up. But use some common sense. Understand where the book flips. Understand where price comes off an anchor and where the last swing point is, and where, when you see that this structure should fit under this structure, right? Then the next structure should fit this and this should fit under here. What does that mean? It's basically look at order blocks of accumulation and trap, right? It's like stacking bricks of price, right? With sellers, all trapped. That's why they went long. The market doesn't go long or short because they're bored. The market goes long or short because of trapped where. It's a net position. Right? What is it? $1 trillion a day now? If 500 billion is short and 100 billion are long, price is going long. I'm talking about retail traders, how they're dispersed. They're going to do the opposite of what the market is showing for order flow. If that makes any sense. If people accumulatively are short, the market will move long. Eventually, it'll show short, keep inducing shorts, trapping shorts, and then say, sorry about your luck, man. Should have took Steve Marr's class. All right. Let me look at some questions real quick. See what I got. Okay. Hey, Steve, you trade FOMC news. No, I don't mess with the news, man. I don't mess with the news because they're not fair with the news. The thing is like, the only time I would ever take a news position is when it's like stupid. And I mean like, they do some shit like this. They do 3 levels, they accumulate, they go like that. And then there's like a blue tracer, my mother's sitting there, I got a car parked on top of it, and then I'm like, okay, it's drifting. They just did 3 levels, they hit the stop high, they trap, they swept below here, and the news is in 15 minutes. You know where it's going, it's going to do that. 9 times out of 10, the news is going to complete the pattern. But the problem is that you're going to get slipped. I showed you the videos, man. It's not because there's a ton of liquidity, there's zero liquidity. And I didn't understand this until 10 years ago. Because I never had Bookmap. And I showed the videos. If you guys want to see them again, I'll pull them. They're amazing. You have all the stuff in the book, and the book just turns pitch black. Nobody's home, man. And price drops around, bounces around like a ping pong ball. And if you're in that, you're out of luck, man. If you know what you're doing in the business and you can become fluid and in a flow state and trade both ways, you don't need the news to make money. I relish the days off when it's non-farm or when PMI or something else is going on in the morning session, and it's like, okay, cool. All right. Any questions at all? All right. It's nice to see everybody. Send me some questions. Keep sending me stuff, man. It's just funny how it is. I love you guys, but don't be afraid to send me stuff. I'm not going to, look, I don't shred anybody. I went over some dude's charts. I didn't mention his name. Everything's good. But there's value in that. There's value in me criticizing you in this room. And it's not like, oh, I'm criticizing you. I'm trying to help you learn. You might be like, oh, Steve shredded me. I didn't shred nobody tonight. Those charts were great. He had some good drawings. The only thing I didn't understand, and he explained it in the chat, was his strings. Because I want you to learn to get, if you're drawing boxes, I want you to learn to grab it here, with a backup order here, and a stop loss here. And if you can do that, then you're going to be in a great position. I guarantee you that person's improved his trading tenfold. Well, I know he has. All right? Okay, man. Love you guys. Enjoyed the session. See you next Wednesday. Good luck. Good trading. Good night.